6/6/2020. Yes, it is. With Apple Computer on a weekly chart, and what a great move it's been. What we waited for on Apple was to make the 52-week high, as it did. So, as a market maker and in the option pit, we do have our other bigger market makers who put this book on at 260 a while back, and that was the 260 calls. But that was back sometime, and that was going out 90 days. But nonetheless, we're making 52-week highs up here, and we are, and we're overbought. Great move up. But what I am going to tell you now is that we're going to be looking at the 335 puts because Apple's overbought, and we are going to fade that pullback. So when any bull market stock, again, when bull market stocks get overbought, here's an example of what happens. And this is just an example. We had called this before the pandemic back on February 10th. We were overbought and we were going to come down. And there are times that we get overbought. And we get overbought, and there's going to be volatility in Apple moving forward because it's ran very far, very fast as a leader that pumped the bull market to the levels that we've had. And one thing about it is that we don't care about the headlines. We don't care about anything like that. All we care about is where the mathematical imbalances are, which direction will Apple go, as it will, and on the intraday market making is taking the position, and then when you are in this very overbought zone with a massive move up in the options expiration Friday, which was on 6/5 Friday, that's yesterday, today's Saturday, there's that diamond, there's that 52-week high. And there are times when we get overbought that you get these pullbacks like I'm showing here. That's what this trade is about right now. Here, you can clearly see the Apple breakout back over here when we get overbought. And we are overbought right now, like we were over here. And the thing about it is that the big breakout on options expiration Friday, and when we held the 315 support, that was another transaction of buying the 310 calls and then rolling them up from there. And, you know, as we move forward, and we only understand that when you got leadership stocks, they are going to pull back. And you can make money when Apple on intraday comes down in price, you make money. And as a market maker, you make money on the put side because the calls are at the top of the market and the call side will come down. So if the call side comes down, honk honk, who's home? Then the put side would go up and we would have a great time together. This is the daily chart on Apple. Once again, when you get big breakouts like we did on options expiration Friday, you always have to sell into it. And we cleared here on the daily. You can see here where these previous tops, when you get overbought, here's a great example. You pull back and then you go back. And here we're overbought and we will have a pullback. And we're going to be looking at that side of the market on Monday. Knowing when to sell is going to be everything. So when you see the daily movement and you can see where the $315 breakout was right here, that's why I only put these amount of deltas in here and you went up 1, 2, 3, 4. That was a very big move, and for Apple anyway. There are certain times to be in it, and then there are certain times that there's other places. But when you do get in overbought cycles, you do get reversals. And we're telling people, if you own it, you may want to take some money off of the table up here because we're going to look at trading the pullback because we're overbought. and that's on the daily. Back to the weekly. We are right up at the high, and I'm also going to pull into play right now. One of the things that we have right here is a $335 put chart, market maker entry prices down here. These were $14, and that was retail, and people never know when to sell. So when the put options were here at $10.50, and they traded on up to the high there, 14 and a quarter. That was the time that the put options were inflated in price, and mathematically they can never stay up here. So that side of the market got mutilated. Down here, because we're overbought on Apple, and yes, it's a 335 put. They don't move a lot, but they're wholesale. No one's been in here this cheap. So, as a market maker, we can go up a little bit higher, and we could, but we know that Apple will have a pullback, and it will. And it got overbought. And this is the side of the market that is very cheap, which is a 335 put, and it's in the money. And Apple has had such a wonderful breakout that it's created such an overbought levels now that beware. There will be a pullback, and that's what we're making a market in, because this is the cheapest side of the market right here. And that is the most overpriced market right there. So when that pulls back, when these are down here at the deflated price, then they would have to go back up, and they will, because they are deflated. And this is the kind of position that is a setup, and that when Apple made the 52-week high, that's when these put options got marked down to those values. No one's been cheaper than that. Let's make that clear. And not only that, because you're so overbought on an intraday level starting on Monday, is when you are getting wholesale down in here, and you steal the price, and you are the cheapest side, and you do know that you are extremely overbought here on the weekly. And you can see here where the diamonds are. That's an algorithm on that weekly closing level of the 52-week high. Welcome to Apple. And welcome to algorithms and high frequency trading technologies. Knowing when something gets overbought, knowing when to sell and buy pullbacks, and making a market, and what is the cheapest side of the market. If you take a look at a public chart, which we can do, you'll see here that on a weekly chart, you're extremely overbought. And you are. And in our market maker app is that when we make the 52-week highs, then that's when we go and buy the put side of the market, because that value is the very cheapest value. So when Apple pulls back, those values go up and you cash in. And we will do it slowly with you. We're the market makers. We're the ones that control the price. You will learn when you're a market maker in options and the buyer in electronic orders is that the prices that we give you are the ones that will control the prices with the other market makers, and that's who you're really competing with when they see your order. And then you have to beat them and get the cheapest entry. So everything has to go together perfectly. You got to be overbought, and it has to be right up there in that zone, extremely overbought. You know, you get overbought. Here's another example. A big wick down, or you get overbought and you go down, or here's an example. You see how they slide that big wick on a level? Well, it happens, and this is just a weekly algorithm up here at the high. And you can see here where These diamonds are all algorithms, high frequency trading technologies, and you can see how the algorithms are working. And you can always tell when you have a diamond, like here was an overbought, it pulls back, but look at the pop. When the diamond goes up there, that's pure algorithmic. When you take a diamond from here on a weekly level and you're up there, that means you're closing up at the highs. And that's what that means. And so this is the complete weekly breakout just to show off of that bottom there. And now it's very risky for investors at the current level because any headlines could drop Apple easily $10. But that's a retail mindset. We're market makers. So when we get back to the cheapest side of the market, where it's going to be 100% your favor of making money. And that's what we're going to do. In our platform, here is a 60-minute overbought, and you come down. Perfect example of what we're talking about as a market maker. So when you go up in rallies, but then you get these pullbacks. So basically on this 60-minute now up here, and it's a 60-minute, and we will be getting that pullback, and we will. So that is another way to let you know that the call side of the market is at the highs. And that means that the call side of the market, because it's at its highs, it's going to come down. And position management, this is a market maker training video. And one of the things that you have to do is you have to have everything in your favor. And you have to know where the weekly close, which was up at the top on a 52-week high. You couldn't get it better. That makes it that much more overbought, and it will have to pull back. And that is the weekly chart, and that is the setup for next week. And once again, take the free 5-day trial. We do have live market makers on standby to meet you in the live trading room where you will see everything happen. Once again, 52-week high on Apple, overbought. We're going to buy the put side up at the market. It could be 15 minutes. It could be 2 hours. Who knows? It could be 3 days from now. But it doesn't matter. The pullback is coming. And that's the reason why we're going to make money. And that's the reason why our new market makers are going to learn, particularly from the Apple setup and looking at the different time frames